Hey traders, it's the Cowboy. Listen, I gotta make this video on this BDT coin because, when I see stuff like this, I'm just getting so excited about Elliott Wave. And, I love when the market gives us, nice looking patterns that we can, identify, and they just basically make everything worth it that we're working for and trying to learn this methodology. And this is a prime example of how an impulsive move should look, how a corrective pattern looks, and just the whole thing is just nice and gorgeous. So if you're new to the wave principle, you might ask yourself, hey, how does an impulse wave look like? And it's one of the simplest things that you're actually first learning. You're learning to count to 5, and then you're getting into those super complex corrections and different degrees of trend and patterns and so on and so forth. But this is a very, very clean look of how an impulse move looks like, and then based on this is what we're expecting next. So if you look at this thing, right, you don't even have to worry about what happened before, right? I'm not even interested in anything, back into this area. It doesn't really matter if this is a wave 1, that's a 2, that's a larger degree, whatever, right? What I'm interested in is counting the move from these lows, right, back in March of last year, all the way to where we are in the present. And to me, this move out of here obviously looks like the first move out of the lows. And I have to count this as a wave 1 of these lows, especially since I'm seeing this larger impulse here in this third wave. So I'm looking at this as a wave 1. I'm looking at this as a beautiful corrective pattern in this wave 2. And the pullback here happening to the 50%, right? So now this is not a fib level on the pullback. It's just a percentage decline into the 50%. The 618 was a little bit lower. The market did not really get all the way up there, but it's good enough for me for a second wave. Actually, sometimes when you don't get very, very deep pullbacks, these rallies are usually pretty massive. So anywhere between, let's say, 23% to 38% for a second wave pretty much tells you that there is a very strong rally coming. What I like about this one, it's the fact that it traveled exactly into the 261.8 multiple of this wave 1. And this is what you want to see from an nice, solid, kind of an extended third wave. The market rarely kind of gives you this nice looking patterns. And I mean, the rejection out of these levels was amazing. I didn't see this at the time, right? So I'm just kind of looking at it right now and just judging what happens kind of next. But it's just beautiful the way it looks. So now you go from a 3-day, let's say you go to a 2-day chart, and you're trying to identify the internal legs of this larger third wave primary, because this is how you know that you have a completed pattern. You have to have a 5-wave sequence inside that third wave advance. This is a lot of things that this is the part that a lot of new traders miss into the Elliott wave. They labor third wave advances without counting the 5-wave sequence inside that larger third wave. And if you don't have a clean count in there, sometimes it's tough to count this as a third wave. And it could be a C or even though you have to have 5 waves inside the C waves, but it just doesn't give it, it can trick you in not giving you a very, very clean look. So please always pay attention inside that third wave. Make sure that you have 5, waves that you can easily distinguish. So looking at this from these lows, you can see that you have a very nice pushback here in this wave 1. Then the market pulls back in this wave 2. Then does that third of a third that you're actually looking. This is the meat of the move in here, right? Because you're looking at 1, 2, 1, 2, and that's where the action actually happens. And this third of a third move, that's kind of how we're calling it when you have 1, 2, 1, 2. And then you go in a 4, and now you're doing an extended 5th. This is also another rare movement that you get. And actually in cryptos is pretty common. But this actually tells you that this move is finishing up. And especially if you're getting into this, you're getting out of a triangle pattern somewhere here in this 4th wave, and you're pushing up in a 1, 2, 3, 4, and 5, and you finish this off. It's just amazing. So going back to a 1-day chart, you can kind of take a look at this. And let me just pull this fibs out of the way so you can see kind of the move for this wave 1. And even in here, it's a very nice move because you're getting a leading expanding diagonal into this wave 1. So you can go into 1, 2, 3, 4, and 5 for a wave 1. Then you're getting a very nice I think this is a corrective pattern. It's a WXY in here for the second wave. And then you're pushing up higher here, maybe into another leading in a wave 1, 2. So you're getting another 1, 2, right? 1, 2, 1, 2, 1, 2, and ram up into the third of a third of a third. And then you're getting a fourth wave in here, followed by a fifth into this larger third wave. Then you're doing a fourth, some kind of a triangle back in here, just more of a complex correction. We don't really have to get into really necessarily, digesting this move. To me, it's clean sideways. And then you go out of here in a 1, 2, 3. That's a triangle in 4. And then you go in a 1, 2, 3, 4, and 5. So you have an extension, an extended fifth wave inside an extended larger fifth, right? So this is, these are all textbook moves that if you're familiar with the Elliott Wave principle, if you read the book from Bob Rector as well, they talk about this. Usually you're getting into an extended fifth, you're getting another extension into the fifth wave, into that 5-wave sequence within it. So these are, kind of ways to identify, and kind of pinpoint a termination into some of these counts. And these are those larger blow-off tops that you're getting into, a lot of the markets, sometimes in the commodities markets, especially in cryptos that are so volatile and people use leverage and all that. And they're just kind of clean. And this is what I love about cryptos, because it's actually giving you one of the best technical patterns in all the markets out there. So what's going on right now? I'm waiting for a fourth wave. And, looking at this, I'm looking at the distance travel, right? I don't want to sell myself too quickly into this fourth wave. I want to give this fourth wave primary plenty of room to develop and to unfold. Why? Because I always like to have a fourth wave that travels at least 100% distance that actually the wave 2 traveled, right? So if I measure wave 2, starting obviously from the end of the wave 1 to the end of the wave 2, you have these lines in here, and this Motive Wave software gives you this automatically. So what I do is I go in here on the fourth, I right click, and I go in time analysis, and you can see I have 4v2, so I can analyze automatically the time into that fourth wave. And then once I plot it, it gives me these lines, right? So it just kind of pushes. And the moment I take this fourth wave and move it, you'll see kind of how it gives me the fibs based on, where those times actually are. So back here at about 100%, it's near, let's say, July 2nd or July 3rd, right? At about, beginning of July, this fourth wave would travel 100% of this wave too. So to me, this is a first indication that whatever was sold off so far, it's just the first corrective move of this larger fourth wave. And the way I think about this, in terms of giving it enough time, is, hey, this could be a triangle, right? That could take some time to unfold, all the way to 161.8 multiple of this wave too. And I want to give it time. So maybe that's just the wave A of a triangle. I'm going to get a B in here. Then I'm going to get a C. I'm going to get a D. I'm going to get an E and move higher. Or this could be wave W of a complex correction. So you're going to move in here in a wave W. Let me just delete this and do it again. So then you're going to go W in here. Then you're going to get a 3-wave up here in a wave X. And then you're going to get another decline here, right? As a wave Y, for example. Something like that. And you can still traverse sideways in time and then break to the upside. So there are several ways for this to unfold. You can do, you can do an ABC for a W, right? And now I'm talking about corrective patterns. And then you can do a triangle here, right? So you can have a WX and then you can have a Y and still kind of come back in here toward these levels and then push back up higher. So I want to give this fourth wave a lot of time to unfold. I don't want to rush, with it necessarily and just kind of get exposure. If you want and you want to be a little bit early, that's fine. You can, maybe purchase, let's say, BTT up into these levels, but you got to be prepared, to kind of have your money stuck for a little while, until for maybe a month or a couple of months until this fourth wave moves sideways. And then you're going to be prepared for a move up into this fifth wave. Remember, as traders, we want to be proactive. We want to prepare before the move happens. We don't want to necessarily react to the move. Now, I talk in my course about, entries and, how you're looking for confirmations and a lot of details about how to kind of, get into the trades. So if you want to wait until this fourth wave finishes up and then look for some confirmation the moment you take X waves or B waves and then initiate, but there's a lot of ways to kind of skin this entry. cat, I should say, right? Maybe you start with the 25% position here. Then you're adding another 25 as you're moving higher. Then as you're breaking lower again. So you're building your position, let's say, into this triangle. And then you're waiting for the breakout, and then you're taking your profits in this fifth wave. And then you measure this fifth wave as a breakout of this triangle. You compare it with this wave 1, and you're taking your profits the moment you see that you have a 5 waves sequence here. 1, 2, 3, 4, and 5. And now you're kind of finished with the trade. So anyway, that's a lot more detail. I talk about that into the course. I talk into the pro room, all the time, into the daily videos. But this is just a beautiful, clean pattern. And I'm watching the time fib. I'm watching this fourth wave developing. I'm patient. I'm looking at it. I know what I'm waiting for. I know what I'm expecting. The market kind of tells me what it is into the cycle, right? I'm not guessing. So I'm very, very comfortable about, looking at this and at any other markets and just kind of, waiting for the market to give me the pattern. And that's all I got to do as a trader to kind of put an edge in my favor. So again, look at these patterns, try to identify them, trying to find them into the markets, be patient, wait. If you want to trade a fifth wave, that's totally fine. If you want to trade a third wave, which is even better, then wait for this wave 2 to finish. Look at the time spent in this wave 2 compared with this wave 1. Give it a little bit of time in there. Look at how much it's pulling back into the fib zones. Look at the patterns, and then use the channels into your favor, right? You can watch. I got a bunch of videos also on YouTube about channeling and kind of how this second wave looks and kind of how these zigzag are and where you start to get involved into the market. But there's just so many things that the Elliott Wave can give you, combined with the standard technical analysis, that it gives you a very, very powerful arsenal about how to kind of watch and kind of how to feel the market and how to position yourself for it. Guys, I just love this. I think it's an amazing pattern. We're going to wait for this fourth wave to kind of finish off. Maybe we'll put some money to work here shortly, and then add as this fourth wave kind of continues to develop, and then we're going to be ready for that fifth wave advance. So thank you for watching. I'll talk to you later. Bye-bye.